Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And obviously we will be looking at it specifically for the pound. Now, these are hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of monthly demand and support. From here, all this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again, here tested and rejected. And at the moment, we can see how this historical structure of demand and support has now just been tested and is already getting rejected to the upside. So in a situation like this, we could expect more bullish price action to be created away from this zone. And now, if we drop down on the weekly time frame, what do we see? Well, from a weekly perspective, we can see how we have a market which is currently bounded at the bottom by this support and at the top by this resistance. However, at the same exact time, if we look at exactly what is going on here and we zoom in, we can see how the market is currently testing the lower end of the support and is starting to try to reject it to the upside and break it to the upside. We can see, in fact, how this was precisely the previous resistance, which is now turned support. Now, if you have a level like this, so you have a relatively big zone that is all acting as resistance and you want to really pinpoint where is the strongest area. Instead of that, there's a trick which is going down on a line chart. If you do that, you're able to really pinpoint where the support or resistance is by looking at where the market actually stopped. And if you do that and then you switch back to candles, you can see that how precise the market is in respecting these zones. In fact, we had a perfect break above that zone, retest, and currently the market is rejecting the area to the upside, so we could expect more bullish price action to be created away from this zone. Now, dropping down on the daily time frame, what do we see? Well, from a daily perspective, situation is quite clear. We have a market which at the moment on the daily time frame is bounded in a range. We have the clear bottom of the range here and we have the clear top of this range here. From here, these previous rejections to the downside were created. Here, these previous rejections to the upside were created. Now, until the market will remain in between these two levels, we could expect more horizontal price action inside of this range. Now, before we continue here with our analysis from a daily perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which, as I was saying previously, is what the non-commercials, so the biggest speculators in the market are doing, so essentially hedge funds. Now, looking at the data for the pound, what we can see here is that with the last reports, net positions have been increased. We went from having minus 24k net positions all the way up to having minus 2.3k net positions, so the pound is currently getting stronger. In fact, with the last report alone, institutions have added 8,513 longs and closed 3,882 shorts. Now, this makes the pound stronger. And in fact, we can see how longs got increased from 28k to 54k and shorts got decreased from the high of 61k down to 57k. So the pound is definitely getting stronger. And keep in mind that, as I was saying previously, since all currencies are traded against the USD, on the spot, if we're looking at the data for the pound, we are already looking at GBPUSD. Now, moving back to the chart, what this means is that even though on the daily we are currently bounded in this range, institutions are adding longs, as we have already seen on the monthly. The market is rejecting a monthly demand and support zone, and on the weekly, the market is trying to break above resistance. What this means is that if, and we don't know if the market will do it, but if we get a break above this resistance, so above the high of the range, this market would be extremely interesting, because always keep in mind that the best probabilities in the market come when all time frames are showing the same direction. So in this case, if we get a break above this high, at that point this previous resistance would become support. So after a break above this previous resistance turns support on the retest, we could be looking for a potential rejection to the upside with quite good probabilities. So if we do get the break on the retest, how we could be approaching this potential rejection to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest you to go and check out transparentfxtrading.com. Here you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the software that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have both a huge upfront discount on the lifetime access price of the mentorship program, one-time payment for lifetime access from $497 all the way down to only $97. Plus, since we have partnered with the forex broker Blueberry Markets, if you want to open an account with them after you join the mentorship program, using the link from your student dashboard, you can get a full refund credited back into your trading account. This is totally optional, just if you want to. So if you scroll down, you will see that directly from here, there is definitely a bit of time left, so you can still join directly from here to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.